So good morning, everyone. Whoever joined the call, very good morning. So today we are actually going through the topic covered calls. So last week we had a super duper session by Venkat Irubandi Garu on CSPs, cash secured puts, which is a popular income making strategy. And covered calls, on the other hand, it's the same, just like CSPs, it is another income giving strategy. So it is a very popular strategy. Most of our group members are following to make money on this in any type of market condition. And today we are very fortunate to have Priyatham Garu to get through this topic. And coming to Priyatham Garu, from 2016 to 2017, he is a dedicated contributor for Fire Group. And not only that, till today, he is active and he gives very strong signals. Last year, if you remember, he is actually giving very Tesla bullish calls. Priyatham Garu, if you remember, actually, we are looking for such calls even more actively on the group. So your insights are very valuable for us. And yeah, stage is yours, Andy. Please get through the topic and you can start.
Yeah.
Thank you so much for taking this.
Yeah. Hi. Yeah. Thanks, Jagar. Okay. Yeah. Good morning, all. Yeah. So pretty much, yeah, I'm going to cover covered calls. I know it's like it sounds very simple, but it's very tough to beat the market. It's not that easy to beat the market. So yeah, with that, I will show you some statistics or the graphs. Yeah, I'll start with it. Yeah, so people doesn't understand like one basic thing, right? So people think that okay, we'll buy some stock and it will give you like make you like a millionaire or something like that. But the fact is like these are the kind of returns you will have with any market. Over the period of time. It's not like a 2020 or like it's like a 1 hour. It's going to be like a long marathon kind of thing. Trading or investing is that kind of thing. So yeah, there are multiple avenues we can go through, but you have to understand what is the realistic returns. Okay, and there might be some kind of like a passing clouds or like some trends will come and technologies will come and they will perish. So but you have to understand over the period of time, this is a fact, right? So real estate has given 10% return year on year, right? So that's more consistent. Okay, so there are many other small caps, high yielding. So no matter what you do, right, your run rate or consistency, yeah, at least all the sectors, this is what it is. So this is a fact. So when somebody says that we can beat the market, you have to understand market has given 7.5% year on year, and that's what our expectations is. And the thing is, like, I had seen a lot of investors who are not investor traders who know nothing about the investing, got into investing and lost a lot of money in 2011, 2001 and 2007 and like for that matter 2020. 2020 they made a lot of money and they lost everything in 2021. So no matter what strategy you follow, whatever you do, you have to understand, okay, what is your rate of returns, right? So if you can make better than beat the market, then you are qualified to do trading. So it makes sense to like even buy something or sell something. If you are not beating market, okay, better to buy the market, buy a SPY and just leave it. It will give you this kind of return statistically. Like this is a research done and by JP Morgan, and they found out, okay, if you are like like expecting this kind of if you are happy with 7.5%, I recommend like buying like 5 or something and just and have fun. Like, okay. But if you really want to beat the market, like when I say beat the market, you can make 10, 20, 30%. But for that, like in today's market, you can have to do a lot of trades. Uh, when I say lot, at least you have to do one trade a week or something like that, and you have to split like that. I will go more detailed, but if you are not, if you want to beat the market elsewhere, so there are some other avenues where you can do. Like you can, comics industry has given 17%. I don't know. This was the 2020 figures. I think it will still like. Uh, some art will give 15%, farmland, collectible wine. Okay, if you are there, the other revenues. Okay, yeah, but yeah, as I said, like crypto has given 113%. Yeah, I don't know whether it holds true today also, but there will be like all the time. There will be some technologies, something will come and something will go. But yeah, you have to be consistent year on year. But if you grow year on year, at least 10%, then I think you're beating market and you'll be much successful. Yeah. So, but yeah, covered call. Is little boring. It's not like 2020. It is like a test match, and it is like for long term. If you are like a kind of a player, like you, and remember, like there will not. It's very hard to get a place in test like career and sustaining it. And people respect Dravids or Gavaskars than yeah, who comes and goes like. Or for that matter, Kohli or anybody but like Kohli also played test, but they're like 2020 players. People will not like respect them a lot, but you have to like go to next level by doing this kind of long term strategies. No matter what kind of market it is, you can still make money with covered calls, but you have to uh, have a little discipline and yeah, these kind of things. When I say like discipline, like you have to understand, you will sell a covered call and stock will move, and you should be perfectly fine with it, because you need to know, like when you're getting into the strategy, you need to know like, okay, I'm expecting 0.05% per week, and I'm okay with it. So I'm planning to win multiple bets, and over the year, like these are the kind of returns. Yeah, I'm going to get. Yeah, but yeah, and these are all other industries. Okay, if you would have like invested only in energy, you would have like got 12%. These are few other things, right? So this is another survey. This 2020, like this 20 years annualized returns from 1993 to 2013. So these are the kind of industries, right? So, but one thing you have to understand is like a lot of folks like uh, women are like in India, like they like buying the gold, and it used to be a very lucrative strategy. But the study is saying since 1970 75, gold is not yielding that much. So other markets are beating the gold. Yeah, but one thing is you need to diversify. Yeah, but I'm just talking to you like I will just come to the point like. What I meant is like, okay, like, okay, now what is this covered call, right? So let's go with the theory. Okay, covered call strategy. We'll go to the thing like we have like something called options, where we can sell a call and sell a put, buy a call or buy a put. That is, you are getting right to buy or sell the 100 stocks, but you are not obligated to buy. It's kind of a contract. So the thing is like you can buy a call of Apple. Apple is trading around 180. You can buy, say that next year, uh, next week, I will buy Apple stock at 180. So, and I'm going to give you a premium. It's like insurance, right? So somebody will sell that insurance to you. You can buy that, and if it goes to $190, but whoever sold you that call are obligated to sell to you at $180. So you made $10 profit. Suppose if it goes to 170, okay. So it looks something like this, right? So if you see, this is a covered call. I'm going to take you there, and uh, so, but here what I'm doing is uh, Tesla stock, right? So I'm trying to like sell a call, $200 call, and I'm buying. Its Tesla stock is trading around $213. So what I'm doing is I'm buying 100 Tesla stocks and selling one call 200. So, and I'm making like if it stock is trading around here 213 between, right? So but the thing is, you need to learn, right, winning the small bets multiple times. But with the theory of calls and puts, right, people might think what is call, what is put. So those are things I think a lot of sessions have been done. Venkat Garu has given that put info last week, selling the puts, cash secured puts. Yeah. So what I'm going to show you is like I'll go there and I'll try to explain through the uh, 1 second. Yeah. Is it not moving? Yeah. So this is think or swim. I hope you all are seeing this. Okay. So I will show you like how to write a call first, how to buy a call or sell a call. But I will take a minute for that. So we'll take a Apple stock, right? So if you go to Apple stock, you can.
Priyatham Garu, we are still seeing your presentation where I think so, not the TOS platform.
Oh, okay, okay. My bad. Yeah. So I think I need
No
to
worries, Andy.
stop share and share it. New share. Okay, new share will do it.
And I agree that point, Priyatham Garu. Till now, what you're saying is like you have to have patience, and most of the income generating strategies you need to have patience because it's not a trading strategy. And to balance your portfolio, ఒకటే style usually ఉండకూడదండి. Like if it is a long term investment, all these income generating strategies are slow, but the win rate, small wins make your portfolio positive
Yeah.
on the whole.
Yeah, I'm getting there. So yeah, people think that yeah, I'm going first. I will show how to write a call to someone or buy a call.
Yeah.
So okay, so in the thinker sim, everybody has to like have some kind of analysis tool like this, right? So for that matter, you can go here. If you open it, you can do add a simulated trade, and this is called a option chain. Okay, so there are a lot of videos about it. What I recommend is whatever strategy you are doing, you do it. Okay, so suppose I'll show with the call because the context is the call. So suppose, as I said, Apple stock is trading around $180. You can go to the like Apple. Now you can say that in 1 week, okay, I will buy Apple stock at $180 and I'll pay $3 premium. Okay, you bought it. So what will happen is, okay, this is going to be your risk. You can go to risk profile and see. Suppose it will show you where how it's going to end up, right? So if Apple stock goes to $200, you can slide there and you're going to make $1,800. Okay, if Apple stock goes to $170, okay, the maximum you're going to lose is the whatever the premium you pay, that is $3.25 into 100, that is $325. So if you go with the normal like a simple stock or simple call option, this is your risk reward ratio. So but but uh, statistically, like buying a calls, you will lose the money, okay, because it will not move a lot and people will it will not happen. It's like a insurance, right? Insurance agent is selling you a lot of insurance, and you'll everybody will buy insurance. Only out of a blue moon you might like face some kind of a incident, accident, and you will claim. Otherwise it will never happen. So, or else even if it happens, because it might move $1, but he collected $3, right? So he's going to keep $2 profit. So, but covered call strategy, you are trying to be like a insurance agent. You are not trying to be like a insurance buyer. You are trying to be like an insurance seller. So, but yeah, I will tell you like what the advantage of it, like how these folks grow and how the growth will happen with this. I will show you that I have the chart. I will show you that one, right? Suppose, okay, we will do a covered call strategy here and see how much returns you are getting, right? So here you are not buying the call, you are selling the call. Okay, and what you will do is at the same time you will buy, okay, 100 stocks. So it is how it's going to be like. This is how it's going to look. This is a covered call, right? So you bought 100 stocks and you sold one call. This is the covered call, and this is how your risk is going to look, right? So even if it goes to like $400, you are still going to make only $200, right? So if it goes down, okay, you can roll the call or you can move it to the next expiration, but within a week you are making $200. And what are you risking, right? So you are risking 100 buying 181 stocks. Generally, people write covered call for the stocks they own, but it doesn't have to be like that. What you can do is you can enter into the uh, enter into a covered call and consistently make. So what is the return here? So we'll just do a math, right? What is your, okay, what is your investment and what is your return, right? So only thing is the reason I told it's a long test game. So only within 1 week, you are risking almost $17,900. Okay, so that is what I'm saying. Like Apple stock can go to the zero tomorrow. Okay, but that will not happen. But yeah, that is the max risk. 181 minus okay, let me do it. Okay, 181.11 minus the premium you're collecting, $3. So that is 178 into 100. That is the risk you are taking. So you are risking $17,800 to make $200, right? So, but if you do 200, yeah, divided by $17,800. Okay, so you are making around 0.1%, but in a week. Okay, that is a risk, and you are trying to like have a hedge, right? So the stock is trading around 181 and you are selling 180. So you got like protection, downside protection of almost a $1. And you are making $200 and you are risking 181 and you are making 0.01%. But yeah, so yeah, this is one of the this is Apple stock and this is rock solid. So you are not getting a lot of a premium, but you are making 0.01% per week. But you have to remember, right? It looks very small, but there will be how many weeks will be there in a year, right? So you have 52 weeks. So technically, like you are making you're making almost 58%. So am I telling the right number? But yeah, I think that's what it's going to be. Like weekly, you are winning. So you're making $200 per week. So and with a limited risk. Okay. So just do it in numbers, $200 per week into 52 weeks. Okay. And dividing it by like, and your risking amount is 8. Okay. So I will make it 200. Yeah. Okay. So you are making almost like 55% returns. Okay. If you write simple covered call for like 52 times, similar way, and hedge it, roll it. So you are going to make 52 into 200 every week. This is for 1 week. So that's 9th June. So what you are trying to do is you are trying to like bet saying that Apple stock will not fall less than $180. Okay. It goes anywhere, you don't care. Okay. And this is the kind of returns you are doing, 50% returns, right? So I had already shown you what is the historical returns of the any sector you take, right? So this is my, okay. So these are the things, right? So with the simple covered call, okay, and rolling it, managing it, you are hands down beating any sector over the period of time. So yeah, don't so this is the risk and reward. So if you have the multiple arenas. So now what I want to learn is how to write a covered call, right? And I will tell you like what are the rules you are writing before the covered call. I'll give you some how to scan. Okay, I had given a traditional Apple example, but there are many other stocks which we can do. There are different avenues, but this is the covered call. So yeah, you are buying 100 stocks and selling a one call against 100 stocks, and you are making 0.01% every week, and that cumulatively, if you add, it's going to 52%. And I will tell you, like, okay, people might think, okay, what 1% a week? How does it matter, right? So if you start with $100,000 today, right? So if you win 24% year on year, so what it is like, okay, we'll assume that 50% you lost, adjusting that Apple stock moved here and there, you rolled and you played with it. So if you win like that consistently, right? Year one, like your 100,000 will become 124, but that doesn't matter, right? But when it keeps going in 5 to 6 years, you will be like 500,000, it will become 500,000, right? So you have to understand, you have to write for short terms, and you keep collecting. That's how these insurance agents survive, or like these companies, big companies, right? You are turning the table with the covered calls. You're not like a petty small time investor, like who's doing like some savings and losing everything and came, like you are trying to play big players game. This is a big players game, right? And see, this is the example I'm giving. Okay, so if you start with 100,000 year one, and if you, okay, per week, if you make 0.04% or 0.06%, okay, year on year, this is the returns you're going to make, and this is how the chart will go. For 0.01% difference, right? Within 10 years, like your account is going to see the gap is increasing. So, but more you mature and more you learn, right? You will optimize, and you'll try to find different avenues and keep writing the covered calls. So your 100,000 now will become 2 million in 12 to 15 years. If you consistently do it and learn it and trade. So that's what I meant, right? So people might think, okay, I'm risking $18,000 to make $200. So for a week, but you have to understand it is for 1 week. So this is the importance of writing, and never like fall for, okay, it's only $200 I'm making, and it's a big thing, but you have to do it consistently over the period of, okay, 52 weeks. And you have to remember, we have 52 weeks, and it's a long game, and this is how it's going to differentiate. And you can try different strategies along with it. This is what I recommend is you do it much safer. Okay, so I'm showing some like 24% year on year, 36% of year on year. Okay, you can make this is but I'm just giving you a number. Okay, it might be initially like you might end up like adjusting. You might not make this much. You can, even if you make half of it. Okay, if you have a significant amount of the portfolio, you can keep writing. Okay, it's not like and this is the power, right? Or you're consistently winning. It's like playing like Dravid, who makes sure that okay, it's a test game, right? And you have to leave some of the balls, and you have to hit exactly, and you need to maintain the run rate. And for that, there are many avenues. Okay, you don't have to do there will be some stocks when earnings are happening, you will get a lot of premium. So what I recommend is depending upon what it is going, you can go down. You don't have to. What I say, I don't recommend writing the covered call this close, right? The price is around 181. You are writing for 180. So what I recommend is instead of that, you write for uh, something like a little down. Okay, deep in the money, 175. Okay, so you are collecting $6. So you might be making 0.001%, right? So but you have to understand, okay, Apple stock is traded in the market, and it can definitely fall like 5 to 10% overnight. Something can happen. Okay, so what I recommend, writing a covered call, you need to think three aspects. So you have to see what is my protection level. So is it buying the stock? Is it better than buying the stock? But yes, definitely it is going to it will be much better than buying the stock, because you are making small gains, and within 52 weeks you are making 50% almost. So for that, what you're doing, so what is the risk you are taking? So, and you need to find, Apple is one of the example. You can take any stock, right? I can take Tesla, and I can take some stocks, but there are rules, right? Writing the app, we are expecting to make only 0.01% or 0.1% every week. For that, this is revenue, and you are making almost uh, yeah, so 50% over the 52 weeks. That's 1 year, right? But we are here to, if you are planning to play a big game, covered call for long-term play, marathon, covered call is for you. And one thing, okay, this is the Reynard-Shane, this is the way which will protect you. And I will recommend writing deep in the money calls and win in long term, and be like a investor mindset, and but use the trading trades. Trader will do everything, right? So you don't be like a buy and forget guy, or like don't be like dollar cost average. So your aim is to make small wins to and have something like this, right? So this kind of returns. So hopping 50%, right? No, I don't think any stock you can beat yeah. So where is my presentation? Yeah. So yeah, and everything, refine everything, and try to find, there are features, there are spy you can write for the crude. There are a lot of avenues, right? Only thing is, what I recommend is buy some 100 stocks, keep selling a call for against it, and try to make 0.01% every week, and your 100,000 become $1 million in 8 to 10 years, and you'll be millionaire by following this simple strategy. But yeah, you got to do it consistently. You got to do it every week, and write one call. And I mean, like whatever the amount you have you can multiply and keep risking that one. And this strategy is appropriate for your retirement account. But if you have any 401k account, or like if you have your Roth IRA account, and keep trying, and keep writing. And sometimes what can happen is Apple can fall 20%, right? So you just keep writing it. Okay, you might lose some money. Okay, but keep rolling the call, or like and one thing you have to understand is, if Apple falls to 160 this week, okay, you buy 100 more stocks and try to keep writing the another call, two calls. Start writing two calls instead of one call. Okay, but think what will happen is it will average out, and you will like try to. But what I recommend is, don't write for the covered calls for any stock, any damn stock. You just make sure that Apple is a $2 trillion company and it's not going to go anywhere. Okay, for something like, so total Indian stock market total cumulative sum is close to $3 trillion. Okay. Yeah. So one Apple stock's revenue itself, like that stock market, like what that total value is more than the whole of India's both Nifty and Sensex total. All the stocks trading value is equivalent to one Apple stock. So you have to write the covered calls only for the fundamentally strong stocks, and make sure. Okay, these are some tips. Okay. So
So, Priyatham
okay.
garu, what type of stocks, like, yeah, more fundamentally stocks is one thing, and high volatility with respect to volatility. So, how does covered calls differ,
No,
or how to adjust
the thing is, the more volatile the stock is, the more money you are going to get, right, in a
by,
call.
by selling premiums?
Yeah, premium. Okay. But thing is, you have to understand nothing. There's no free lunch or no free dinner. So the more risk you take, more money you will get. But so eventually everything will be evening out. So you might, so yeah. So if you're getting too much money, okay, I recommend like looking it in your, like be like a critic of your own. Okay, and don't try to like write the calls where, like, for suppose if Upstart stock was there, it was trading around $350, and now it is trading in 20s. Okay.
Hmm.
So what I want you to understand is follow some rules, right? So write the covered calls. I gave some rules. These are not like uh, writing the covered calls, and make sure that do something like some research. Okay, don't write for okay. So these are the things, right? Basic rules. What I recommend, I kept it here.
Hmm.
Okay, you check, right? So write the covered calls only for the stocks you are willing to own. They should be. It's feel like that is the those are the companies you want to own, and you then only write the covered. And I strongly recommend not do like 10 companies, right? Do your research. I'm giving an example of Apple or Tesla, right? Tesla also, like it's okay. It's not falling in. I don't write covered call for Tesla. See, even though, because there's one criteria for me, right? So 50-day moving average should be above the 200-day moving average. So what I recommend is, if you choose to be investor or the trader, there is no, you can't take half measures, right? You spend the money, time, or do like that. At least understand what is 200-day moving average, what is 50-day moving average, and where is, okay, that is the basic indication of the trend of that stock. So there are like a lot of theories, a lot of books, but what I recommend, understand only thing, okay, is this stock's 50-day moving average about 200-day moving average? Okay, if it is below 50-day moving average, is below 200-day moving average, don't write the covered call. Okay, only write a covered call if 50-day moving average is above 200-day moving average. And try to scan. Okay, what I recommend is you go and scan, you get, there's no easy measures. Okay, there are like sharks in the market who are waiting to eat you, right? You are their prey, and they want to find less informed or too greedy investors whom they want to they prey upon. Okay, and there's no easy way to put this across. This is a fact, and there are 99 failure stories and only one successful story. Okay, which I have seen. Okay, even when yeah, I say I'm an investor, I'm a trader, I'm doing these things, like a lot of my own family members will say that, okay, no, don't do it. Okay, as they see that as if I'm doing some kind of a robbery or like some kind of, that's the feeling you get. That's because they're not informed, and a lot of people go behind the greed. You don't aim for and people want to reach become overnight rich, and they did some mistakes. They had not covered all the uh, like uh, mm, weak spots. Okay, but there are a lot of failure stories, but you can turn the tables and win small and do become a greatest of all, like by following the discipline, right? So I can't give you a lot of things. As long as you follow these 4 steps, right? Okay, I'm telling you, like, you will be millionaire in 10 years. Okay, and I'm telling you 8 to 10 years. Okay, and these are the simple stuff. You don't have to do oh, okay, you have to buy crypto or do something like that. Buy any stock which is falling under this category. Okay, it should, the 9-day moving average should be above, the price of the stock should be above the 9-day moving average, and long-term trend, the 50-day moving average should be above 200-day moving average. Okay, and remember, right? Okay, whenever you are buying a stock, okay, do some research and see that, okay, if that company comes for the sale, if I have the money, will I buy it or not? If you are convinced that, okay, yes, this is the business I want to own, okay, then only buy that stock or write a covered call against it. And don't feel bad, right? If it goes to 200 to 400, okay, you met your immediate target of 0.05%. Okay, if you can uh, if you can grow, if I literally mentioned it, like, okay, a lot of amateur traders are there. Even I consider myself as an amateur trader, but as long as you don't follow these simple things, definitely you are also, I don't do this, I'm telling you, right? I don't do, I don't have this kind of patience, honestly. So but if you want to turn the tables and you wanted to prove you are the person who want to be millionaire, starting with some capital, and you want to grow it like this. So this is what difference it will make, right? So this is there are like a lot of stocks which will give you this kind of things, 69%, okay, 6%, okay, or like 4%, okay. But you have to understand, try to spend some time and see that, okay, if a stock is giving too much premium, you just need to understand why it is giving. Is it like fundamentally strong or not? So for that, what I'm saying is your job is to scan for the stocks which are giving this kind of returns, and don't fall in love with any stock. Okay, no matter whatever it is. I used to be a Tesla bull and I love Tesla, but now I don't see the Tesla same way. Okay, the risk is too much. I don't write a covered call for Tesla for sure. Okay, I will gamble with Tesla stock. That's a different story. Okay, and you have to understand, you need to be honest to yourself. Are you gambling or you are investing? And I am telling you, 99.99% of amateur traders only gamble. Okay, they will say, okay, this can happen, that can happen, and this can go to like a moon. No, what is going to happen? Historically, it happened, and history bound to repeat itself. And if you are not like getting disciplined, if you are not following the right way, okay, and right practices, you are dating with the trouble. So you should know what you're doing. And investing or trading is not for everyone. If you can't control your emotions, if you get greedy, if you think that, okay, it is going to go to everything will go like a Bitcoin, yeah, it's a disaster waiting to happen. And unfortunately, 99% of the folks are like that. So yeah, when you start, but sooner or later, if you want to be a big league player, you have to embrace this kind of things. Okay. And I don't want to complicate it, say do that. These are things. You follow these things, and I'm telling you, 100,000 will become $1 million in 8 years, 8 to 10 years, right? So the thing is, if you find, okay, little risk you need to do, you just need to know how to write a call and which stock to own. What I say, you just make sure that you can take sector leaders, or you can take a semi stock, or you can take any stock. Okay, it has to fall under this category. So I was telling that I used to be Tesla bull, but I'm not writing a covered call for Tesla because it is not falling in my criteria, right? If you look at Tesla stock, what is happening with Tesla stock? I'll show you why I will not write for Tesla also, right? So let's make it. Okay. So you don't have to have this complex, all these technicals also, but are you seeing my screen now? Thinker screen, or still?
Yeah, we can see your TOS and Thinkorswim platform. And mostly looks like Pritam Garu, just correct me if I'm wrong, like sideways, if the stock is sideways, then this is a go-to strategy.
It doesn't matter. So you just need to make sure that 4 points I gave, those are the things you have to follow. You are not trying to own that stock. You are trying to make 0.01 to 0.05% every week, right? So if I say this is how you can look at the trade. So what I recommend is everybody try to try to understand how to do this basic. So this is how you can open a chart here and give any symbol, right? I'm giving you a Tesla. Okay, I'll show you how to filter that one. Also here, right? So this is the plain chart. Okay, you can click on this beaker. You see, this is the Thinkorswim I'm showing. I click on this beaker and you can say moving average. Okay, you can take moving average exponential, click it 2 times and click on this and you change this length to 50 and give some this as red color. Okay, so okay, and make it 200. Okay, so see, you see Tesla stock. Okay, definitely 50-day moving average is below the 200-day moving average. I will not write the covered call for this, no matter whatever it is. Okay, even if I love Tesla, I don't care. Okay, so when you see Apple stock, okay, this line, red line is the 50-day moving average, and the blue line is the 200-day moving average. Okay, so the moment it goes, it cuts above, right? Okay, I'll think about it. So here, right, I said sell the Tesla when this happened. Okay, at $278, we got the death cross. Okay, and yeah, that's why you should not fall in love with any stock. Okay, and see what happened from 278, it fell to $101. And definitely these are not the stocks you are willing to write the covered calls, right? You are going to pay dear if you go behind. So what I'm saying is you should be. And one more thing I added, so you can add one more average. That's the 9-day moving average. Okay, these are the things I gave you, right? So there's one other moving average I wanted to add. That's 9-day moving average. So you don't have to understand lot of things, but take these simple things and make sure that yeah, 9-day moving average color is what color it is. Okay, it is blue, so I can change it to the white. Okay. So okay, one criteria is meeting. Okay, so at least the price here is 9-day moving average is 196. The price is 213. So but okay, if you write a covered call and stock can fall, if stock is falling below 9-day moving average, you roll down and roll out. Roll downing means if you wrote a call for 180, roll out and roll down. Okay, you write you bring it down to 160 next week. do some kind of action and learn over the period of time. One day I can't teach you everything, but as long as entry criteria, exit criteria, you should be clear. So yeah, the reason I'm not writing a covered call for Tesla is, see, the first criteria is meeting 9-day, the price is above 9-day moving average, but second criteria is not meeting. So we'll see, can we write for Apple, okay? So Apple, okay, definitely 50-day moving average is above like 200-day, and the price is above 9. So I can write a call for Apple. Yeah. So yeah, these things, yeah, this is pretty much this one, and you can write for any stock, which is
Priyatham garu, what price we have to? Is there any?
That's your appetite, right? So the thing is, see, if these two criteria is meeting, like the most probable outcome is stock will go up and stock will not fall, right? So, and you are going behind, you can write, right? So if you want to go aggressive, you can write at the money, okay? But if you want to be a consistent player, right, and beat the market slowly, you don't care, right? So if you have like already $1 million accounts, you don't care, you want to grow it like 12 to like beat the market just. What you can do is you can go, suppose here, if I'll take an example here, right? So we'll take the, see, I will not go, so this is Tesla stock, okay, but I just wanted to show, right? So this is the premium you're getting, right? You're getting good money, okay, more money for percentage wise, you might be making more with the Tesla than Apple, but that doesn't mean that I'll go ahead and write for the Tesla. One thing is how risk appetite taker you are, right? So if you want to say stock is trading at $200, if you are getting 0.0005%, that means like 0.5%, right? 0.5%. If you are writing at 170, if you are getting 0.5%, if you are happy with it, if you are like, then write for 170. Okay, if you have a small account, you wanted to grow, you still believe in Apple, then you wanted to, like, definitely you need to grow, right? And where are you, right? So what I say that is, it's technically relative, right? So what I meant is, it's definitely, where are you? Okay, if you had already started your journey, you are in the 5th year or 6th year, you try to write like calls like little far, right? Okay, maybe 10% down, 3% down. So for a stock to lose 5% a week, it will not happen every day. Okay, and 10% to lose, it will not happen every day. So those are the things you can master. But what I recommend is start writing the covered calls for this one. Even it moves 100%, but you be happy with 0.5%. But within, like, if you keep on doing this consistently, in 10 years, you can grow. So you can write for, there's nothing wrong, right? If you see if these two criteria are meeting, like in the chart, if you see this one, criteria 1 is meeting and criteria 2. So this is 50-day moving average, 200, definitely above that. And long-term trend is in your favor, and short, okay, you don't have to understand all this like nomenclature, confusing terms, but understand these two things. Okay. Just it should be, the price should be above the 9-day moving average, and like and the 50 days should be about 200-day moving average, and blindly write it. Maybe $1 less, $2 less. See the chart where it is doing, and I'm telling you, right, most of the times it will happen that it might Apple might fall to 170. Okay, but that's why I'm telling you, you should be willing to own that stock and keep rolling down, rolling out, do something and try to meet your average. Okay, your question, like in cricket terminology, how can I explain is, depending upon the ball, you make a decision, you wanted to leave it or make one run, or you want to hit a six. Think like Sachin or like Kohli, right? and don't even try. No big player will try to hit 6 on every ball. But what I'm saying is, if it is a bouncer or a Yorker, leave it. Okay. So what I'm saying, if it is a clear ball, there's no fielding, then go ahead and write. So if you are like, if you think that market is tough and everything is falling, try to write $5 less. If it is, you think that, okay, market is bullish and everybody are like going good, try to like week on week, right? You don't have to wait for a year here. You're trying to only target for 1 week. Sometimes, right, you can write the covered call for the same day. On Friday morning, you can write and still collect some 0.003%. Okay. So, and try to spend some time and research, and there's no right or wrong answer. You can write the lower you go, less premium you are collecting. And sometimes you just try out. And I'm telling you, these are the good stocks, right? There are some junk stocks, right? There'll be too much volatility. Okay. Because there could be good stocks also. And your job is to like choose what suits best for you, best for your strategy. But what I can tell you is, you can write a covered call for any of the stock. And your aim is not to like wait for stock to grow. Your aim here is to beat the market, and your aim is to convert your 100,000 into $1 million in 8 years to 10 years. Okay. And I'm not saying that this will be applicable for the person like me. I will not be happy with it. I don't have that kind of patience. But what I will do is 50% of my capital or 70% of my capital, I will try to do it, because it's not like you can't like hit every ball, right? In the 2020 also, last 5 years, you can't take risk on the over one. You can do that one in last slog overs. You can do slogging in the last 3 to 4 overs. So for your question to answer, depending upon what time of your career you are in, and what is your risk appetite, and if it goes wrong, how comfortable you are adjusting with it. Okay. So if you are so conservative investor, go some 5% down. So when I say 5%, it could be like $5 below for $100 stock. Got it? Yeah.
Sir, one question, Andy.
Mhm.
For example, I don't want to follow 100-day, 50-day moving average, 200-day moving average, and 9-day moving. Nothing. I don't care about where the stock goes, go down or up. I'll take one stock like QQQ. Okay. I know for sure it's not going to go to 0, or it may go to like go down like 80%. That's fine with me. For example, back in 2000, I bought just 100 shares of QQQ, and I started collecting 1% a week. In 2000, year 2000, for example, I just back tested. Today, I see that, fortunately, QQQ is up 1,000%, more than 1,000%. Okay. Whereas I collected 1,000% in the premiums too at the same time. And if I compound it, probably, I may get like 1,300 or 1,400%. So in this case, the only difference I see is I picked a stock like QQQ, which I'm pretty much sure it's not going to go to 0. It's not going to get delisted. There's no chance of that. It will be there in some shape or form. At the same time, almost, luckily QQQ is up, so 1,000%. So I'm getting like almost premium collection. I'm getting like 1% a week. I'm also getting like 1,300%. So if in this case, and I don't need to worry about, where it is going, correct? So does it make any sense picking up a stock like QQQ? I mean, indexing this matter. But if you take a stock, we cannot guarantee, right? If you take an index, to me,
that's what I said. Okay. Yeah. I got your question, Andy. Yeah, congratulations. You made a good return. Yeah. What I'm saying is, there are a lot of avenues, right? If you can, if you have, depending upon your portfolio, your question is right. Okay. It depends upon, it's like which career. If I give you the cricketing analogy, what I can give is, you need to prove yourself in lower leagues to perform at the higher leagues. See, the thing is, if you have $1 million portfolio, you can do something like that. What I'm saying is, I am not recommending to like bet on any single stock. You can definitely go for the indexes. But the thing is, indexes might not give you 0.05% every week. They might give also. See, this subjective, there are 18,000 stocks in the market, and we have only like ample number of indexes because they are all together and in some proportion. We agree with it. So it's subjective. What I'm saying is, what I'm recommending is, if you are early in the career and you can take little risk, okay, you go for a single stock, because at the point of earnings, near the earnings, if the stock is going, even QQQ will not have earnings for that matter, okay? For the earning stocks, you might be getting more premium. You have to understand, your objective is to get 0.005%, okay? If you can get this 1% to 0.05%, 0.05%, whatever, like this kind of returns, if you want to see, you need to go behind anything which is giving you and take a little risk. Okay, so nobody will let any like a gully player to play in IPL or like a test match for India, right? There will be a billion people, and you need to see. And at the same time, you can't say that, oh, I can only play, like I will only play for India. So you need to have your portfolio grown to that area, and you have to do there. And your risk appetite and all good things you did, right, over the period of time, like you would have done, followed the discipline, maintained it, you would have been reached the state where you are now. But what I'm saying is, our objective is to make sure, but you have to follow 9-day moving average and 50-day moving average, 200-day moving average. You can't say that, okay, I will not follow that. If you are saying that, you are not qualified to do this kind of strategy. You can do anything else. Okay, that's what in a like blunt way I'm saying it, because if you are not considering the trend and you don't have any friends in your market, okay, for you in the market. So what it, in simple terms, you have to remember, okay, you are not above anyone, okay, you can go to zero, nobody knows. But as long as, okay, you can be a trend follower or you are not a trend follower. If you are not a trend follower, trading is not for you, at least historically speaking. Okay, in a blunt way, if I have to answer the question, I will answer it like that. I will not write a covered call for a stock, okay, whose moving average, its price is below 9-day moving average. And I will not write a covered call for a stock or an index, or for that matter, anything whose 50-day moving average is below 200-day moving average. Okay, so yeah, you can choose, but there's no single way to skin the cat. You can do it multiple ways, but here our objective is to like beat the market and beat that comfortably. And you go switch and play in different markets, perform whichever is giving you the results you are looking for. Okay, Andy? Yeah.
Okay.
Yeah. So pretty much any questions, Andy? And I think I covered like this thing. I showed like how to write the covered call, and this is how. And winning.
Actually, another small thing. Suppose we were taking an example of Apple stock where we were writing a call at 180, and suppose there is a 20% drop. Suppose the stock went to 160. In that case, how to roll over or how to repair that existing call? Adokati chupiste, I think we should be good at it.
Yeah. Okay, no problem. Adi, one thing, same thing ఏమంటున్నా నేను సపోజ్ ఓకే లెట్స్ వెళ్దాం. ఇప్పుడు ఏమైందంటే సపోజ్ యాపిల్ స్టాక్ 60కి పడిపోయింది అనుకోండి. సో టెక్నికల్గా 160కి పడిపోయింది అనుకుందాం. ఇప్పుడు ఇది టెస్లా స్టాక్ ఉందా, యాపిల్ స్టాక్. సో ఇప్పుడు ఇట్ ఈస్ 180, 160కి పడితే, సో టెక్నికల్గా మీకు $1,300, $1,400 మీకు లాస్ చూపెడుతుంది. సో టెక్నికల్గా ఏం చేస్తారంటే ఇంకో 100 స్టాక్స్ కొని ఇంకా కింద టూ కాల్స్ అమ్మడం మొదలుపెట్టచ్చు. ఎందుకంటే వన్ గుడ్ థింగ్ ఏంటి అంటే 160కి పడింది అనుకోండి, పడితే మీకు టెస్లా ఇంకొక 100 స్టాక్స్ మీరు కొంటే మీకు యావరేజ్ 180 ప్లస్ 160 170కి వస్తుంది. మీకు యు ఆర్ గెటింగ్ లైక్ స్టాక్స్ ఎట్ 10% డిస్కౌంట్ ఆల్మోస్ట్. అంటే ఐఎమ్ నాట్ సేయింగ్ దట్ ఎగ్జాక్ట్లీ, బట్ కంపేరింగ్ విత్ టుడేస్ ప్రైస్ అండ్ నెక్స్ట్ వీక్స్ ప్రైస్, యు ఆర్ గెటింగ్ స్టాక్ ఫర్ మీకు మీకు డాలర్ కాస్ట్ యావరేజ్ అవుతుంది. ఎట్ ద సేమ్ టైమ్ ఇంకో రికమెండేషన్ ఏం చేస్తానంటే, ఇఫ్ యూ హ్యావ్ 100,000 ఇన్ ద అకౌంట్, మీరు దాని తగ్గట్టే చేయాలి. ఓకే, మీరు మైట్ బి లైక్ యాపిల్ స్టాక్ మైట్ నాట్ బి యువర్ వే టు గో. Okay, so because you can't write a covered call and you will not have enough liquidity to manage it. Okay, so అది ఇంకా అందుకే ఫస్ట్ ఆఫ్ ఆల్ try to do it and be prepared to like buy 100 stocks and write ఇప్పుడు 170కి వస్తుంది కదా, 170కి వస్తుంది ప్రైస్, మీకు 160కి పడింది, మీరు 180కి 100 స్టాక్స్ కొన్నారు, 160కి 100 స్టాక్స్ కొన్నారు అనుకోండి, మీ యావరేజ్ 170కి వస్తుంది. సో ఇమీడియట్గా మీ ఆబ్జెక్టివ్ ఏంటి అంటే కవర్డ్ కాల్ని అప్పుడు 170కి కవర్డ్ కాల్ రాసి మీరు ఇంకొక 160కి కవర్డ్ కాల్ రాసి 2 కవర్డ్ కాల్స్ రాస్తారు, 2 పెట్టుకొని మేనేజ్ చేస్తూ ఉంటారు. సో మీరు అల్ట్రా కన్జర్వేటివ్ అయితే ఇమీడియట్గా ఏం చేస్తారంటే, నేను మామూలుగా $160కి మీ పుట్ కొన్నా, యూ విల్ బి పేయింగ్ వెరీ లెస్ ఫర్ ఇట్. అంటే మీరు ఒకవేళ మనీ ఉంటే ఇంకొక ఆప్షన్ చేయొచ్చు. నేను ఇంకోటి ఏంటంటే, ఒక్క స్ట్రాటజీతో మనం గెలవలేమండి. అంటే దిస్ ఈజ్ ద లాంగ్ టర్మ్ స్ట్రాటజీ. I might be like giving an exaggerated version of like only do covered calls and then చెప్పట్లా, but you can protect your investment just by like ఇదే కొన్నప్పుడు సపోజ్ యూ విల్ టేక్ ఇట్ రైట్. సో 160ది మీరు పుట్ చూస్తే మీకు యు ఆర్ పేయింగ్ 7 cents కదా. సో జస్ట్ వాట్ ఐ రికమెండ్ ఈజ్ ఏదో ఒకటి ఒక ఊరికి అలా
just hedge kinda, suppose if it is downturn you can get some out of it.
Something like and whatever works for this Apple stock, this thing I'm talking about. So ఆబ్జెక్టివిటీ ఇప్పుడు చూస్తే ప్రొటెక్షన్ తీసుకోవాలా లేదా అంటే, ఫస్ట్ ఆఫ్ ఆల్ మనకి అర్థం చేసుకోవాల్సింది ఏంటంటే, there is no right or wrong thing అండి. You can buy pay insurance and the probability of Apple stock going to 160 next week is very very low. Okay, so ఎందుకు చెప్తున్నా అంటే, the revenue of Apple is like is more than lot of countries total stock market itself. Okay, India being the fourth largest stock market, total India's revenue whole sum of all the stocks in India stock markets is 3 trillion. Okay, Apple's revenue is 2 trillion. Ante just there will be first time for everything. Anything can go wrong, but you can be like going by averages, going by statistics. You can pick and you don't have to buy 160. That's why it's very cheap, right? 0.7 cents, right? You are paying $7 for that thing to happen. Okay, so if something like that is there, the probability would have been like there, but yeah, but అది అలా చెప్పుకొని మనం అదే ఇండెక్సెస్ ఫ్యూచర్స్ అనుకోండి చెప్పలేము, బట్ యాపిల్ స్టాక్ అంత పడాలి అంటే లైక్ ఫర్ దట్ థింగ్ టు హ్యాపెన్, something significant, all other market should be like down by much things to happen. Many bad things will happen before that happens here. So adi I think you got what I'm trying to say. But again అంటే మీరు అలా పడ్డప్పుడు కొంచెం స్టాక్ యావరేజ్ చేసి keep selling the covered calls.
Yeah, because covered calls, as you said, it's a long term.
Yeah, it's a long term and okay, if you are like a 2020 player, or if you're like a short term guy, this is not for you. Okay, test match is not for like you should go. This is for next level league, and this is for it doesn't mean that you cannot do it. You have to have that like that kind of vision, or like that kind of patience, perseverance to like continue. If you are not okay, I bluntly say not for everyone, right? So not everybody can play test cricket. You need to have certain certain skills, certain kind of traits for you to become a test player, and you will earn respect and you will earn the money, everything by going through by taking that path. And this is one of those things. And I'm telling you, like, if the market is sideways, you will not get any premiums. Okay, so if it is okay, you definitely will not get any premiums. Okay, then what I'm recommending is there might be bear market in one sector and there can be bull market in other sector. The reason I kept this one here, right? So when the stock is trading above 9-day moving average and 50 it's above, like 50 is above 200, it means that it is in the bull market for that stock. Okay, so that's the reason I'm like bluntly saying that follow these rules. But it has innate hedge, and try to go 5% or 10% in the money and write the call. Don't try to write all at the money or like out of the money. Okay, so yeah, so you might be like making less or but making more, but be like make sure that where are you. Okay, and if this happens, right, if a 50-day moving average is about 200-day moving average, the stock falling 5 to 10% is very unlikely. Okay, there are some like scenarios it happened, but it's very unlikely. Okay, and the market is unpredictable. Nobody knows when it comes to market. Nobody knows nothing. Okay, they say that, right? So historical performance will not like guarantee the future performance like that. So they're all like SEC like want to us to mention that disclaimer. Okay, this is statistically historically happened. It doesn't mean that it will continue. But if we can only go by statistics or like trend what happened in the past. So in that aspect I am mentioning that.
Got it, Andy.
Yeah. అంటే ఇంకోటి అది ఇంకోటి ఏంటంటే, but you need to, if the stock is falling below 9-day moving average, okay, so you can short the stock and buy sell a put. All that is for next. I don't want to complicate it, right? So you can do like other way also. Okay, so the stock and cover the call, buy a call, exactly reverse of it. Okay. So if you wanted to do something like that, then you do exactly opposite of it, right? If you see that if stock is below 50-day moving average and below the price of the stock is below 9-day moving average, okay, then you can do buy a call and sell 100 stocks.
Okay.
Exactly opposite of it. Okay, so
if you have 100 stocks, maybe that is the strategy you had to do.
Yeah, if you really wanted to do other way, you can short the stock and buy the call also. Okay, do exactly like opposite of covered call. Yeah, but that's for next level, and leave it for some like big players. But depending upon the account you have, you can try the simple strategy and still beat the market comfortably.
Yeah, thank you so much, Priyatham Garu.
Yeah.
I think a lot of insights, and as you mentioned, you have to follow certain discipline, like have patience and follow the rules bluntly. If it is going out of the trend, just come out of the trade or go short on it. So
Priyatham Garu, Priyatham bro, a question. So generally covered calls bearish strategy అంటారు కదా. సో మీరు వచ్చేసి ఇక్కడ 50-day మూవింగ్ యావరేజ్ అబౌవ్ 200-day యావరేజ్ ఉంటేనే నేను చేస్తానని చెప్పేసాను సార్, విచ్ ఇస్ బుల్లిష్
స్ట్రాటజీనే అంటా నేను. ఓకే,
ఓకే,
covered call is you are not trying to like earn the rent on it. What are you doing is you are leasing him, and you are week ki lease చేసేస్తున్నారు. ఆ లీజ్ కి 0.01% కానీ 0.05% వచ్చేది చూసుకుంటున్నారు అంతే.
ఓకే, యువర్ ఎయిమ్ ఇస్ ఓన్.
ఓకే, సో మీకు హౌస్ ఉంటే యూ కెన్ లీజ్ ఇట్ ఆర్ యూ కెన్ రెంట్ ఇట్. ఓకే, నేనేమంటానంటే లీజింగ్ ఈజ్ మచ్ బెటర్ దాన్ రెంటింగ్ అంట. ఓకే, మీరు బేరిష్ స్ట్రాటజీ ఉన్నప్పుడు మీరు ఏంటంటున్నారంటే మీరు రెంట్ చేస్తా అంటున్నారు. ఓకే ఓకే, నేనేమంటున్నా అంటే ఐఎమ్ ప్రిపేరింగ్ టు సెల్ ఇట్ ఆఫ్ ఫర్ 1 week. ఓకే, సో అది పైకి వెళ్ళిన అనవసరం, అది మనకి అనవసరం. ఓకే, యు ఆర్ కలెక్టింగ్ దట్, యువర్ ఆబ్జెక్టివ్ ఇస్ టు మేక్ 1% ఎవ్రీ వీక్. సో 52 weeks లో యు ఆర్ మేకింగ్ 52%. ఓకే, ఐఎమ్ టెల్లింగ్ యూ నో మార్కెట్, నో, ఐ థింక్ ఎట్లా షోన్ ఇది చూపెట్టాను కూడా. సో ఇంత మటుకు హిస్టారికల్గా ఓకే ఓకే నో సెక్టర్ హ్యాస్ గివెన్ లైక్ 50% ఫర్ యూ. ఓకే, ఫర్ యూ టు get that 50%, you need to change your approach strategy, right? So you got it. So I think you got what I'm trying to say.
Yeah.
For example, ఒక వీక్ లో 4% పెరిగింది అనుకోండి స్టాక్, whereas you collected 1%. సో ఆ టైంలో మనకు కవర్డ్ కాల్ మనం క్లోజ్ చేయాలంటే కనుక ఆ వీక్ యూ హ్యావ్ టు పే 3% in addition, right?
You don't have to pay it కదా. నేనేమంటున్నా అంటే leave the stock and buy another 100, go to another stock which is fulfilling criteria and do it. Forget about, don't try to fall in love with the stock you own, right? You give it away. సో మీరు ఏమనుకున్నారంటే ఇల్లు కొని లీజ్కి ఇచ్చేసారు అనుకోండి, పోనీ అది వెళ్ళిపోయింది. ఇంకా నేను go for other one and try to make 0.01% and keep. Okay, and can quality meet అయితే, that's what I'm trying to say. You don't have to only like QQQ. You don't have to only like Apple. There are many stocks. There are 18,000 stocks which are being traded in NASDAQ or multiple stocks. Okay, and try to go there and do that business. Okay, think like 1 week contract. Divide, rather than thinking for 1 year or 6 months or 3 months. Think for 1 week, and your objective is to make only 0.005 or 0.006% every week. Okay, if stock moved 20%, doesn't matter. Okay, over the 52 in a week, okay, you are going to another stock and trying to make 1%. In over the 52 weeks, you are definitely making 52%. Your 100,000 will become 150,000 by end of the year. Okay, a stock might go to increase 4% to 10% in a week, and next week can come back 5%, or it can go 15% and it come back to 10%. But definitely it is not going to, very few stocks will go 50%, 52% in a year. Okay, very few stocks. Okay, and for that you need to hit a lottery like Tesla. Okay, so I meant and probability, like if a stock is growing that much, okay, the probability of falling also is same. So there will be too much momentum and everything is same, right? Risk and reward also you can sum up and it will be like that. So yeah, నేనేమంటున్నా అంటే if something moved up, don't worry. Okay, be happy. Okay, you are meeting your strategy. This is a bullish strategy you are doing. అది వెళ్ళిపోయింది, go for other one and try it there. కానీ pick 5 or 6 stocks or 10 stocks or 15 stocks and try to understand. And one thing, it go in cyclic way, right? So earnings వచ్చినప్పుడు పెరుగుతుంది, మళ్ళీ పడుతుంది. They mostly trend in a range. Okay, so for sometimes it will break out. So if for a breakout strategies, generally covered calls are not for you. But అది కొన్ని మీరు రిస్క్ కూడా తీసుకోవాలి. What I say is, the shots you are not taking, you are losing them, obviously, right? What I will say is, you buy the calls when you see a trending. If you are so bullish, okay, don't do covered call, just buy the call. Okay, so what I'm saying is, దీంతో వచ్చిన మనీతో కొంచెం తీసి, if you are so bullish about any stock, just buy the stocks or buy the calls. Don't sell the covered calls. Okay, so yeah, as everybody said, there's no single way to skin the cat, but this is for you to beat the market consistently, well above and comfortably. So but if you are seeing all good auspicious signs and you think this stock is going to go up, I'm not recommending you to buy the covered calls. I'm telling you, go ahead and buy the calls. Yeah.
Sure, Andy. So anyone has any more questions, Andy, for Priyatham Garu? We can take one more question, and
Yeah.
I think it's
If you want to
already
check any stock, how is it like? We can do that one also. And how much time we have? Yeah, we are almost okay. 10 minutes. I'll wrap it up. If anybody want to see what's going on with any stock, let me know.
I think they're good at it.
Yeah. Okay.
So thank you, Priyatham Garu. Thank you for sharing your valuable suggestions with us. Thank you so much, Andy.
Thank you.
Thank you everyone who has joined. And actually, Fire team is also conducting Varshit's like a competition for stock exchange, stock thing, Andy. So please follow that also. Join the Discord channel and follow the updates there. So thank you so much, Priyatham Garu. Have a good one. Thank you, everyone.
Thank you.